All right, so we finished the day on a high note, at the highs of the day, no less. So that ended up being a really, really good thing for a couple of reasons. Number one, we finished the week on a positive, right? We weren't finishing the week positive earlier today, but because of the rally, because of the intraday move, filling in this gap, the opening morning gap, we ended up finishing the week positive. So that was a good sign. And then the other good thing about it is we finished the options expiration cycle ended. So we started a new one here on Monday. We just had expiration. This monthly period that starts and ends at the expiration cycles, it ended positive, barely ended positive. So we avoided, ended above the 12-month moving average, so or 12 expiration cycle moving average. So that's a very positive thing because again, in the morning we were negative, and that's generally a pretty negative thing when you break the 12-month moving average, no matter what kind of month it is. So obviously we still have one more week left in the month, so the monthly candle is actually above its moving average, and we'll see what ends up happening. I do believe next week we'll probably end up with a good week. We'll talk about why in today's video. I'll show you some of the signs, what's driving this price action as always. You always take a look at that. The sector rotation, how we ended up finishing the week from a sector rotation standpoint, how bonds and the dollar are doing along with commodities. Those are major asset classes that have big influences, especially with the rate cut odds moving. Here we'll talk about that, and then take a look at our trade idea. In the material space, one of those sectors that has been doing relatively well, we'll take a look at doing a trade in there. A little opposite. We've done one already in the material space here recently, and we're going to do it on the other side of the trade here today. So let's go ahead and get started. Today is Friday, March 21st, 2025. This is the Market Outlook from MarketScholars.com. My name is David Settle. Before we get going too far, I invite you to subscribe to our YouTube channel. This icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Follow me on Twitter for more content between the videos. And join our Market Outlook Facebook group that we've created. If you're watching us here on our blog, check out some of these other things over here on the right, including our Market Outlook live videos, where I take a look at old Market Outlook trades, see whether we should stay in them or get out of them. Scroll down to the bottom, or we also put on today's trade ID already before the market closes. Come down to the bottom, click this heart. It opens up this tab here. Hit that like button that pops up. Eventually, it'll pop up here. Usually doesn't take that long, but just click on that like button there. Same thing here, click this thumbs up icon. It opens up this tab, hit that like button there. Again, the more you do that, it helps get our content out to all of our followers on these platforms. So thank you to those who do this day in, day out. Those who don't, you can do it right now while you're watching with one or two really easy clicks. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. As you can see, we started the day down. We finished the day higher. But we actually started the day with a pretty decent opening gap to the downside, over 1% down to the downside. SPY only came up because remember this is kind of the triple witching for the month. So SPY was down a little bit, about 0.25%, but SPX ended higher, up 0.08% by the end of the day. So you can see too, SPY had a late rally right at the end of the day. So technically, you can see we're up at about $1 in the after hours, and that's that move right there. So right at the very end, there was a push higher, and so that might be actually reflected in SPX's move, and for some odd reason, not necessarily in SPY's move. But 57. 67. So a good move, with a pretty decent range, below average, but not as bad as what we've seen here. These kind of tight, relatively tight ranges. But we moved up here. You can see the near-term line again both the near-term and the momentum line are in neutral territory between 40 and 60. The near-term line had come down out of bullish territory. It's been flirting, trying to get back up above it. So it's not falling, and most likely won't fall. Most likely will bounce back up higher. The momentum line's coming out of bearish territory, and again, is not necessarily. I don't think it will fall back down. I think most likely it will actually turn back up and turn higher here up to the upside. So we are still 3.25% below the moving average, not back above the 2.5. Remember, we're watching. I ultimately think that we're going to move to lower lows. But not before we get a bear tag where we get up to the moving average, or at least close to the moving average. if not get up a little bit above it with this light green shading and get that bear tag there. So we didn't get the green tag, the 5% green tag by the end of the week. I thought we would get it by the end of the week, and we didn't. We're up 2.64%, so we're still more than halfway there. I bet you now that we're through options expiration, you'll probably get it now. Probably get up through there now that we're through this period here. So that's the S&P 500. Let's take a look at the NASDAQ 100, which you can see the NASDAQ was up 0.4%, so a little bit higher. The near-term line did get back above 60 from dipping its toe on 40. The intermediate line, though, is still in the reversal zone, so we're not, this is not a strong bullish near-term rally in the least bit, but we are coming off the lows there. If I take a look at the Dow Jones Industrial Average, it has light green shading. It's getting closer. It's to only 2.5%. The intermediate line is actually out of the reversal zone. The near-term line has been in bullish territory for most of this time. But again, no strong short-term move to the upside. If I take a look at its zigzag chart, it's up 2.87%. So a little bit higher, but still not quite to the 5% mark. And then looking at the Russell 2000, you can see, again, it made a pretty decent run, but actually came down the last couple of days, was down 0.5% today. Its near-term line dropped below 60 and 50 today. The momentum line is lower, but it's not an oversold level. So, again, I don't think this is a precarious near-term decline. I think there's a good chance we just bounce right back off of this and continue its climb up to its bear tag. I remember it's had a little bit more of a drop than the large cap indexes have, because it's in correction, right? It already is in correction. It already did have its pullback and failed bounce and move lower, and we're 3% higher now. Obviously, we were much higher than that, closer to 5% there. Obviously, not at 5%, otherwise we'd have a green tag, but pretty close to a 5% number there before the drop of these last 2 days. Let's go back to the market forecast, and of course, take a look at the weekly version since the week is now over with, and you can see again we still have this bull tag, which we tend to get when you're in correction mode. You get the bull tag, and the question is, are we going to bounce up like we did in October, or are we going to not bounce up like we did in 2022? That's obviously the question. We're down more than 2.5% below the moving average, which we were also in October. But remember, we got that bull tag at the end of a multiple month-long pullback. Right, we are just starting this pullback here. It's been multiple weeks, but we're just kind of starting here. Again, very similar to what we saw over there. That the intermediate line over here when we got this bull tag was actually close to the chart's midpoint. We were out of bullish range. We are not quite out of bullish range. We got it last week, excuse me. And last week the intermediate line was at 73, so that's up in this range. So we are not even close. Again, very similar to getting the bull tag over here when the intermediate line was at 75. So not quite the same bull tag, right? This is a bull tag at the beginning of an intermediate decline, and not one that already has been outside of 80. Already had plenty of weeks of pink shading. See, we got the bull tag in the first week of pink shading, and we got the bull tag in the first week of pink shading over here as well. So a little different scenario in that regard. If you take a look at the monthly chart, since we did finish a options expiration cycle, and you can see here's the monthly version. The near-term line crossed 60 and 50. Momentum line's lower, but not in the reversal zone. But a big drop. Like, this was a pretty down options expiration cycle. In fact, probably one of the bigger expiration cycles, let's see, that we've had here in a while. In fact, the last time the S&P was down, let's just do SPY. Last time SPY was down this much in options expiration cycle, which was over 5% to the downside, so it ended up being 6%. So the last time, September of 03, that expiration cycle was a pretty down one. That was at the end of that move I was just showing you. But before that, it was in 2022 at the worst of that 2-month cycle where we washed out there. We also had a couple here when we washed out in June. Here, that cycle that started it all. Remember that it started on December 18th, but it ended in July or January. So that's when we had our pullback at the pullback stage. That one was 4.76, and here we are again after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 straight expiration cycles to the upside, and starting this one off with a third of a percent gap, finishing down 6%. There, you can see there aren't very many moves that are down, that are 6% declines to the downside. Obviously, this one was a big one during COVID, and then there's your there is the correction of 2018. Here's your corrections of 2015. You can see we had one cycle where we were down 7% there. Here's a correction, or a move in 2014 with the Brexit and the Ebola virus there, down 6% that cycle. Some of these that started corrections at months after, you can see this one actually rebounded in a big way, up 10%. This was not a correction either. That was I believe that was the flash crash, maybe. Here I have to go back and remember what it was in 2013, 2012. 2012 there, that kind of sparked the QE3, and QE3 started after this one. 2011, there's the correction of 2011. We're actually down 14% that expiration cycle. And then 2010 correction there started with an 8.5% decline. So needless to say, this is a pretty decent decline for an expiration cycle. And the last couple declines that we've had in 2023, and then earlier last year, in March of 2000 to April 2024, we rebounded in a big way, 6.92%, 7%. So we'll see if we end up rebounding. Even that one finished with a rebounded with a positive move. That one rebounded positive. That one rebounded positive, and then this last one didn't. So we had 1, 2, 3, 4, 5, 6. The last 5 all rebounded with positive expiration cycles, and we'll see if number 6 turns out to be the same. It doesn't look like it because of how deep it is, deeper than all these other 5. It looks more like some of these others that didn't rebound. So that's our monthly market forecast. If you take a look at the weekly chart, this weekly chart here, again we have a second straight week closing below the 40-week exponential. Most likely will not close below it next week. I expect we'll jump back up above it. You can see it ends up being a higher close. So that's a good sign. That's a sign. So next week's Hakinyasha candle will open up about 57.22. Right now we're trading at 56.67, which is actually higher than this close. So it'll be a small body. There'll probably be a little bit of a lower shadow, maybe upper shadow. Most likely we'll get some kind of transition candle next week, and we'll see how bullish that ends up being. As that PPO again is falling below 5%. And is falling towards 0, and the candle has gotten smaller, but it's still negative above its average there. If I take a look at the 3 green arrow chart, you can see again, we have 2 green arrows here and some pretty decent volume today, but 2 green arrows, we're still well below the moving average. If I take a look at the weekly version of this, again, we still have 3 red arrows, and again, the momentum here. This is actually not 5%. So let's move it down to the 7%, which is where the MACD is now. So roughly there, 7%, maybe a little bit lower. I can put it right on it. 7%. There we go. So again, if you look at, we never had this much bearish momentum in 2022. So the last time we had this much bearish momentum was during COVID. Before that, you can see. See, that's a MACD. Yeah, that's why. Let's change this to the PPO. So give me 1 second to put on the PPO. This one. Bring this up here. All right, it's probably not going to show. It's easier to see with the other MACD, but Needless to say, that's the problem. It's the I need to get the arrows on there, and that's the nice thing about this. But needless to say, here you can see the momentum is pretty bearish on a weekly chart. Like it's hard to compare whenever the prices change so much over a long term like this. But stochastics you can compare as well below 50. It's actually below 40 now. Again, that's not very common for that to happen during some of these other declines. It did during that 2023, but you can see some of these other little pullbacks here. It doesn't get this deep, so this is the second straight week of above average volume, as we are below that moving average there. If I take a look at some of these other oscillators, your DMI, obviously it's still pretty negative, or not as negative as it has been. The negative indicator is back above 25 today. The positive is still well below 20. That's on the daily version. The weekly version of this, you can see we are still around 30 on the negative, and again easily below 20 on the positive down there. If I take a look at the RSI and the CCI, we are still not as bearish levels anymore, but not bullish either, and we're not above zero here on the CCI. And of course the weekly CCI is still below minus 150. And the weekly RSI is below 50 as well, still at bearish levels, even if it hasn't crossed below 40 yet. The Ichimoku cloud, well below the cloud, mature bearish trend going there. On the weekly version, we have finished the bullish trend. So last week we ended this long-term bullish trend that started off the 2023 move higher. The rate of change, the 26-week rate of change, is now gone negative. So this is the first, if I were to go to the 26-week rate of change, obviously 26-day is pretty darn negative, but the 26-week, this is the first time it's gone negative. And again, it did it over here for 1 week as well, right? It did it briefly over here at the beginning of 2022 before we rebounded and had our failed pullback bounce, and then it got back negative. And you can see 2018 and 2020, and briefly there in 2018 in the middle before we rebounded, and then you can see 15 and 16. Like that's again another characteristic of a correction is that we have 6-month returns that are negative, right? And this is what 26 weeks is. So that's the Ichimoku cloud. That's what this red line is on the weekly chart. And again, we have ended the bullish move that we had, again similar to what we had there. And still no trend, but at least we're above the cloud. Still, we haven't come into the cloud. Now that's what happened over here as well. It takes a while to get into, if not, and eventually below the cloud when you're in correction. But the first stage is to end what is a long-term mature run. That's a very, very long-term mature run there, and it's gone, right? You wanted to get up above 50-1, and it finally did it over here. Multiple weeks after that low, and then it crossed above the dotted lines, which is the next stage where it goes from a weak trend to an intermediate trend, right? We're up to new all-time highs, and then it took off from that point until these last couple loweeks where we ended the trend. If I take a look at today's intraday moves, you'll see, again, a lower high and a lower low, but we closed above yesterday's low point, and we were talking about that in the class today. That's kind of was the hope, was we would finish above yesterday's low, and we did there with that last little push at the very end, filling in most of the gap, almost all of it, most of the gap there, and still holding that point of control below us here for the last 4 weeks. The range still relatively high, but coming down because the high point now is coming down, right? So every new day, the high point still stays on this left day because we're not getting a new high anytime soon. So it's still coming down the list here. But the red line now is below 70. So we have the combination that we need for a low point to be set up, right? Being below 70 in the red line and being at 0 on the green line, and then a falling range. So that's our setup for a low point being in place. Does that mean we can test it? For sure. Like, can we go a little bit below it? Sure. But the bearish momentum to the downside is done. Like, we have set up our low point here. We've had, like I said before, pretty decent range and volume, 6 points on the range. The volume a little bit above average at 83 million there. So when I look at the context of those numbers, again, that number's coming down without the bounce. Remember, the bounce typically makes it go up higher off of the low point. And we've kind of peaked here on the low point. And usually we get a few days of a move higher. And again, that's kind of the concern about the failure of this bounce, because we're not getting big moves to the upside, and the volume continues actually to move higher even with the bounce that we've been having. All right, finally, let's look at the VIX. The VIX ended up down 20, ended up being below 20, and ended up closing below this 95% mark. So that's actually a really, really good sign for the VIX to close at that level there. You can see it ended up closing here at, on this chart, at 94.7. So that's a very positive close for the VIX to get that low. It's still above its 200-day moving average. If you look at it relative to its average values, it's still above the 200-day. So we're not out of the woods yet, even though we've been getting a nice little decline. And the other big benefit, the other big nice thing is, look at that VVIX. That VVIX has dropped like a rock. Let me bring that up here. So we'll look at VVIX on this chart. Dropped like a rock. Look at that. Clearly dropping below 90. We never dropped below 90 during any of these other times. But the VVIX has dropped like a rock. In fact, this is one of the biggest declines in the VVIX. If I look at the rate of change, oops, not that chart, sorry. Let's look at the rate of change and look at VVIX. And then we'll take a look at, see, it would be 1, 2, 3, 4, 5, 6, 7, 8 days. So we'll change that rate of change to 8 days. This is a really, really good sign. VVIX dropped 32%. So again, it dropped that much over here in August after we had that big spike up. We didn't really have a big spike here, but that's a really good move there. And again, you can see 32%. That's other than like 2021. See here, here's a comparison to early 2021. We dropped 30. What did that end up being? 32% there as well. But look over here in 2022, like we didn't drop down below 90, but you can see in the same time frame we ended up dropping about 20%. So you can get a run up. In this case, the run up was 32% to 38% to the upside, and then you ended up falling 19%, 20%. Well, here we didn't have a run nearly that big of a run up, and we had a much bigger decline. So it's like, oh, is this going to be one of those declines where we've seen where we just bounce right back up? I mean, look, we bounce right back up, we bounce right back up because it's so far so low. That's, to me, a little bit, I like the drop, but I'm a little concerned that we dropped as much as we did, and we off of a peak where it didn't rise really as much as we've seen in the past, right? Like these kind of spikes up where, okay, we drop and we kind of stay down. This doesn't look like the kind of rally that would produce a drop where we would stay down in that particular case. All right, now let's talk about what's driving this price action today. And you can see gold and developed markets, have been the best performing asset classes over the last 3 months. The Qs and IWM right there are sitting hand in hand at the worst, along with the dollar for that matter. So pretty significant moves in those asset classes there. If you take a look at just today alone, the dollar had been bullish for most of the day. Let's take a look at a chart of the dollar and take a look at its bounce that it had here. Pull up the dollar index. You can see getting back above the 8-day moving average, MACD and stochastics low, but turning higher. Remember, getting above the 17 days what really matters there. And considering that we are, again, below the 200-day, we need to see if we'll fail at those moving averages and work our way back down and spend an extended period below the 200-day moving average or not. You can see at the end of the day, the Qs and SPY really took a jump up to the upside. They were down negative. Real estate took a big drop down there. And you can see emerging markets and developed markets were down along with bonds. Bond prices were down today after, excuse me, a little bit of a run up to the upside. You can see the last 2 days coming off those highs after the gap up yesterday. Coming off those highs and moving down again below its 8-day moving average. The MACD has been below the moving average this entire time. The stochastics is above its moving average, but still in the lower half of the chart there. Of course, that means if bonds prices are going down, that means yields are coming up off their lows, right? And you can see after opening up yesterday at under 4.2%, we closed today. Remember, it closes a little bit earlier than the stock market, but it closed today at 4.25%. its moving average has been above, MACD, excuse me, has been above its moving average for most of this time. And you can see that stochastics is moving lower, but in the upper half of that chart. So that was today. If I zoom out and take a look at the whole week here, you can see for the week, gold ended up being your best performing asset class along with commodities. Small cap stocks ended up slightly positive. And again, U.S. equities, the large cap S&P turned positive at the end of the day. The Qs as well turning positive here at the end of the day. So, we had the potential here for a 5-week in a row stretch where we were negative, and that we haven't had one of those. We've only had one of those back over here in April of 2022 in the last 20 years, or last 10, I think 5 years, I think is what I look back, or maybe 5 or 10 years. But it's not very common. And you can see we had 7 in a row there, and 10 out of 11 when we were kind of in the worst part of that correction, that big washout. This was one of the washout stages of that correction. Of course, the other washout stage was right there when we were down 6 weeks out of 7 to the downside. So 4 weeks in a row to the downside is a pretty significant move. And if I were to take a look at those 4 weeks together here, you can see they ended up being down. They're 7.69%. As a whole, right? 7.69%, which again, we haven't had that big of a 4-week decline since that same period of 2022. In fact, that exceeded any 4-week move we had at the beginning of 2022, where, that January we were down 7% there. And then the next 4-week window, again, down another 7%. It wasn't until April that we had a move down 9%. And remember, again, we were over 7% to the downside there on a rolling 4-week basis. So really important that we didn't go down to this week to avoid that 5-week move to the downside. So we had some interesting moves, and you saw that the developed international stocks still doing very, very well. In fact, here, let me pull up this 12 grid, and I'm going to pause the video really quick and change all these charts, which are all really strongly bullish on the daily chart, except for the U.S. I'm going to change these to a weekly chart, and then I'll unpause it. So give me 1 second here. All right, so here's all the weekly versions. And again, you can see, we're getting clusters in Italy and China even, though India still has been really struggling, got oversold clusters, but we had a really good couple of weeks here on India. And you can see Korea also has some oversold clusters early in the year. It's also been rebounding back towards its 30-week moving average there. And you can see Brazil, same thing. Brazil's actually getting a bear tag there on its weekly chart now that we got light green shading and a yellow line. But everything else is dark green shading and a green line. All those developed markets, China, Europe, right? All of these, dark green shading and a green line. Canada and the U.S. look vastly different because they are showing us bull tags, right, where we have light pink shading and a yellow line. That's the only market right now internationally that is showing this sign of weakness. Now remember, a lot of these areas you can see they had dark, at the 2022. You can see, even into 2023, you had some red lines there in China. And they were all kind of bearish as well in 2022. Everything kind of went down. And then, they didn't go up as much over the course of the 3 years. In fact, over 3 years, the S&P, despite the recent weakness, is still up 25%. You can see Germany is up 34%. Italy is up 47%. But those are kind of outliers. Korea's down 19%. Brazil's down 30%. China was down quite a bit before it rebounded there. So it's still a pretty good return, but you can, again, a unique set of weaknesses here for these two trading partners, right, that are all both having their issues with each other that you're not really seeing globally right now. Even though on April 2nd, you will start having some of the similar, probably not to the same extent, but similar tariffs going on reciprocally among these major economies with each other and with the U.S. All right, let's take a look now at how we finished the week from a breadth standpoint. If you take a look here, we did go back to being negative on the breadth. So we had a few days this week of being positive. In fact, pretty much every other day this week. One small negative there, but we finished the week on a negative day of breadth. So when you look at like these oscillator or these breadth indicators here, in particular, the net new highs and new lows, right? This is one of them that we look at. It's still negative. In fact, dropped back down, not below its average, but dropped back down below the minus 100 level. So again, that's a function of here of looking at, get this loaded up here. There we go. So 162. So it shouldn't be 200. So maybe this hasn't been updated yet. I don't think that has been updated, so it shouldn't be minus 200. We're at 162 minus 60, so it should be minus 100. So that will probably be updated here over the weekend to reflect that there. So, but still, I mean, that's not positive. We were kind of headed towards a positive direction and didn't turn positive. We were headed back above 200 here briefly this week. We finished the week back below it. We were headed towards 250. We weren't as close, but we were headed towards that. Now again, dropping back down. So you can see the breadth had been improving, but now is rebounding. In this case, this ratio rebounding back up above the 1, which is bearish in that regard. So not the best finish to the week. We did, the advanced decline. This is what this represents. The 10-week exponential, 10-day, exponential moving average of the advanced decline. The ratio of that is up to that 0.53, again well above its average, which is a good sign, hence the rebound that we've had. We've had a lot, we've had some days with a lot of advancers relative to decliners. Obviously was not the case today. So 967 out of 2800 was our net advancers. On the NASDAQ, it was 1,800 advancers. So a little bit better ratio than what we saw there, but still not very positive for a day where we ended up positive on the day. So not a good finish to the week from that standpoint. And if I look at the sector rotation, remember, if I were to zoom, you can see that how energy has been an outperformer the past 3 months. Well, it's also been an outperformer since this bounce that we've had, but not today. This is the move. This is the move, and that finish. Now we were outperforming for most of the day until technology kind of rebounded. But this is what we want to see. These three leading the markets and everything else lagging, right? That is what we want. Unfortunately, that was a really kind of an only today phenomenon, as you can see. For most of the week, technology has been underperforming just about everybody, along with consumer discretionary. You can see materials down there as weak as they, after being relatively strong finishing week. Communication services, again, kind of matching the market for most of the week until ramping up here today with a good return. But energy and financials, energy especially, is not a sector we want to lead. And it's really been the one that has been leading off of this low point. The low point started on the bounce started on the 14th. It's up 6%. Financials up 4%, and again, some weakness in these other areas that had a good day today, but more of an oversold bounce in those areas so far. In fact, if you take a look at technology here on an absolute basis, pull up XOK here on the daily chart. Let's go back to it. You can see the weekly chart and how bearish that is, how bearish it has been. Let's look at the daily chart, and it's still below important averages here, well below that 17-day, and then the ratio is well below its 50-day average. And we do have some improvement here. We're in the improving category with a momentum above 100, but the relative strength is so far below 100 that we need a lot more momentum to this to get that relative strength working in the right direction. At least it is, at least moving in the right direction, if not on the weekly chart, starting to move a little bit on the daily chart the way we want it to go. So in an improving category, moving up to the right. Same thing with XLY, moving up to the right. XLC is the only one still looking relatively bearish on a week. But that's the side. Remember, that's the ratio that we really want to see improvement in is that XLK relative on one hand relative to XLE on the other, right? I had really broken down the last couple of weeks, breaking below the 200-week moving average here this week. But despite that, when you look at just today, remember, as bullish as energy has been, as bearish as technology has been, finally having an up day, right? It's the only up day of the week. It's still well below averages, and they're still about to get a death cross. The 50's crossing the 200. But still, hey, at least we stopped the strong momentum slide to the downside, where we got really bearish in all these oscillators. We might, be finally starting to turn the tide, and this is probably, getting up to at least a 17-day on this ratio probably be what we need to get that 5% tag on the S&P 500. All right, and that brings us to our trade idea of the day, which is actually in the material space here, which had a weak performance this week, really only underperformed, outperformed staples. Let's take a look at Nucor. So Nucor has its earnings coming up here pretty soon, just like we did with Nike here yesterday. You can see that by going into it now, even today, it dropping almost 6%, dark pink shading and a red line, the intermediate line falling towards the lower reversal zone, having already crossed again back below market sentiment. The near-term line forming a bearish peak and coming back into bearish territory there. Momentum line down below it. If you take a look at the weekly chart, obviously we've been in this death cross for Nucor. We've made a run back up to the 40-week. We failed. It looks like we're rolling back over PPO, rolling back over to the downside as well. When you look at the 3 green arrow chart, obviously we have a new set of 3 red arrows and a pretty decent amount of volume on a day like today. So there's your 3 red arrows there, and you see all that volume. Taking a look at the 2-line version of this chart, and you can see we broke the 50-day moving average after getting back above it, and all these lines getting back above it. We've crossed the 30, but we're holding the 50, kind of trading in between, and then boom, breakdown. There's the earnings coming up after April expiration. A big amount of volume, MACD and stochastics moving down to bearish levels. If I take a look at some of these other oscillators, like the DMI, let's see, the DMI above 30 on the negative indicator, well below 20 on the positive. If I take a look at the RSI and the CCI, we are breaking 40 on the RSI again, way below minus 100 on the CCI. So that's still down there. If you take a look at the Ichimoku cloud and the trend strength indicators, we are back below the cloud again after getting into it and failing to get above it. Rate of change crossing back down below the price here. So it's negative. We have a weak trend starting to develop. And then finally looking at the Bollinger Bands and the Keltner channels, we close below the lower band and below the lower Keltner channel, barely below the lower Keltner. Came off the lows of the day. Well, finished up slightly above it actually. But you can see the momentum is bearish. We got red. We never did get red dot or green dots here, and it looks like now we will with this move down to the downside. The bandwidth's at a low level, starting to move higher. So what I decided to do here was to take a look at the April option, since we're still outside of 20 days. Sell that 15 delta, so be a little bit aggressive since we're at 52-week lows. Sell the 110 by the 115. And the position size for the same $500 risk that we always do, and getting about a 3-to-1 reward to risk ratio on that trade right now. So really good move. Opportunity to take advantage and help offset the bullish trade that we did on X on US Steel here just a few days ago. So, and that one's a little bit more of a longer term trade, and this is more of a shorter term to see if there's any weakness here in the short term in that space. All right, well, that wraps us up for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up in your thread with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, comment on the video. Join us at MarketScholars.com for free. Follow and like us on Twitter and Facebook as well. Have a great rest of your weekend, everybody. We'll see you all on Monday.